instead of having the PowerPoint and making this a lecture, or we've probably all been in class for the past few months, and summer break. Is everyone on summer break for the most part? All right, so we kind of want to make this interactive and a little fun, but also informative. And I just wanted to go over just some basic principles with you all relative to understanding credit, understanding the basics of credit, particularly credit cards. Now, we're not necessarily here to talk about personal loans and car loans or what have you. We may kind of tie those in as examples. But specifically and particularly we'll be dealing with just understanding some basic principles relative to credit cards. You've got quite a few pieces of literature there at your desk. If you'll turn to page 18 and 19 of your PNC Borrowing Basics booklet. Page 18 and 19, we'll kind of just go through some of the basic principles as well as some of the points that PNC feels is important for you as consumers to be aware of and to understand. And I've got 10 rules or 10 mistakes to stay away from as it relates to credit cards. And we'll talk about those today as well. But just to kind of break the ice and warm up a little bit, get the blood flowing, how many here actually own a credit card? Have a credit card. You have a credit card. Okay, quite a few. All right, so let's get a better understanding of our demographic this morning. So, how many folks here have recently matriculated from high school and going off to college? Okay, how many folks here are transitioning or now in grad school? Okay, great. And so, any high school students? Year or two left in high school? Okay, so we have mostly college students and grad students, right? And we all have a credit card. Well, the mistake I made going right into college at the beautifully landscaped campus of the University of Delaware, it is beautiful, isn't it? That's right. My alumni donations go towards the greenery. But the first thing I wanted to do in college is get a credit card. I want to feel like a man. I'm in college. I'm out on my own for the first time. That kind of thing. And I just the first thing I did was in one of the kiosks in our student center. There was a finance institution there that were giving away T-shirts and hats and all kinds of other little free goodies. And also they were soliciting folks to sign up for credit cards. And I did because I didn't have one, and I wanted to show my parents that I was independent and responsible and I could be on my own. And I just went for it. And bad mistake for a freshman in college. Well, actually, no, I was second semester freshman. I turned 18 that second semester, and I just went to town. Just started using the credit card just for silly things. Just swiping away. Wanted to impress my friends, wanted to impress the fraternity that I aspired to be a member of, all those kind of things. And never had really a clue, and did it without my parents' consent. They didn't even know. And needless to say, my dad was very angry when he found out. But I learned a valuable lesson in college that actually shaped and molded and transitioned my career. I began my studies at the University of Delaware as a chemical engineering major. Fun, right? And decided that I wanted to change my career to be more applicable to being around people, dealing with people, as opposed to dealing with rats in a lab or chemicals in the lab. And also, I just had a desire to master my finances. I made a goal for myself that I would, and this is when I knew that I would begin to establish a career in banking, that I would become a vice president for a bank before the age of 30. And I'm not even 30. I'm a few years away from 30. So I became a vice president for PNC at a very young age. I'm only 27. And I just began to set goals. And I set a goal that I wanted to be creditworthy enough to purchase a house before the age of 30. And I've done that. I wanted to be creditworthy enough to eventually purchase multiple properties. And I'm not there yet, on my way. But that valuable lesson that I learned in college stuck with me throughout the duration of my life and into my career to understand that in this world that we live in, the world that revolves around credit, we've got to master our credit and master our finances if we want to be comfortable and if we want to be where we want to be in life, if we want to reach those goals that we've aspired to. So I just kind of want to talk about some of the principles that PNC feels is important and we feel are important in understanding and mastering your credit and being a little bit more financially savvy and financially intelligent as it relates to particularly your credit and your finances. So rule number one, if you want to write this down, you can. We're going to kind of piggyback from my 10 rules as well as the PNC booklet we have here. Rule number one, do not obtain too many credit cards. How many of us have multiple credit cards? The problem with multiple credit cards, okay, of those of us that have multiple credit cards, how many of us keep balancers or keep those credit cards at a zero balance? So the idea is we have multiple cards and we're keeping them at a zero balance, and we think that we're really, we're effectively managing our credit, we're doing the right thing. Predominantly, yes. However, you have to understand that even if credit cards have zero balances and you have multiple open accounts, this could cause a lender or an underwriter to question what would happen, worst case scenario, if you, as the account holder, give in to temptation and max out your credit cards. So it can work against you, even if you're keeping those cards at a zero balance. So you have to ask yourself, what credit cards mean the most to me? Now, someone asked in the last session, well, if I close out my cards, won't that negatively impact my credit? Absolutely. But you've got to be wise. If you've got a Discover card, an American Express, Visa or MasterCard, and you've got a Sears card, and you've got a Macy's card, or what have you, do you really need all of them, and which ones actually make sense, and which ones actually have the higher credit limit, and which ones are you keeping the higher balances on? Which ones makes more sense to the lender? So, your Macy's card, your Sears card, and you're looking to consolidate, you're looking to establish your credit worthiness, and maybe you're going for the first time to buy that home or to buy that car, you might ask yourself, do I really need it? And if you're paying it down every month and it's at a zero balance, you've had it for a while, it may be a good idea to ask yourself, can I consolidate? And that brings me to my next point. Point number two, when we're talking about consolidating. Point number two is always become fully aware of the introductory rates that credit card companies offer. Always. Because if you're in a situation where you're looking to consolidate, you're looking to maybe close out a card or what have you, and again, I'm not advocating closing out multiple cards, but in this particular case, when you're going before, maybe a bank for your first home or what have you, a mortgage company, and they're telling you to clean up your credit or maybe consolidate, and you're thinking, okay, well, my hometown bank, they have this great introductory rate for balance transfers for me to carry over my balances from card A to card B. Never misunderstand. Always be fully aware of the fine print and what those balance transfer rates entail. So we have a little sheet here. If you look at your little disclosure sheet, we're going to this is just an example of what a disclosure sheet looks like. Understand the fine print. Understand what the introductory rates entail. There are statistics out there that show that a lot of times folks don't really pay attention to what the rate will fully be once the introductory, what we call teaser, is over. So we've got this, they're offering this great 0.99% or 0% on balance transfers or what have you for 12 months or 24 months. And you're thinking, great, I can get rid of that Discover card and transfer it over to that Bank of America new wonderful introductory rate. And I'm just using examples. I'm not an advocate for any of those banks. I work for PNC, just FYI. And so you're thinking, man, what a great deal. But then you fail to realize that in the disclosures it says, okay, 0.99% introductory rate on the balance transfer, but what about the annual percentage rate? Oftentimes we miss that. And then when we're looking at the annual percentage rate, are we understanding the difference between variable and fixed? And are we reading the fine print, which is point number 3. The tiny text is where you'll discover where the 0% or very low interest rate, when and where it expires. What are the limitations? Does it only apply to balance transfers? Does it also apply to new purchases? As well as a specific amount of time that rate is being offered. You know, 0.99% on the balance transfer is great, but if you're charging me 18.99% on regular purchases, is that really smart? Especially if my previous card, you know, I was at a rate of maybe 10% or 11.99%. So don't just be quick to go after the shiny, glittery offer. Always read the fine print. Number 4, never choose a credit card for the wrong reasons. This is a mistake that I made in college. You know, we understand we have multiple credit cards for various reasons. But understand that you got to do what's right for you. A credit card company's job is to extract as much money as they can from you. That's just the bottom line. That's why they're in business. But your job is to save money and to be frugal and to manage your money properly. So, point number 4, don't choose credit cards for the wrong reasons. And that's going to bring us into PNC's 5 credit rules to live by. Because this coincides with understanding credit and not choosing credit cards for the wrong reasons. Point number 1 says, don't take on more debt than necessary. More isn't always better. In fact, sometimes more credit can lower your score. So here we have, and we're understanding the basic fundamentals, and again, we're not going into, you know, the expertise of credit, just understanding the basic fundamentals. There are situations where having more credit than necessary can affect you, and as a matter of fact, you got to ask yourself, can I manage all of this? I've got multiple credit cards. I've got the car note. I've got student loans. Anyone have student loans? Understand not paying back your student loans, I mean, depending on what kind of, you know, situation you're in and what kind of negotiations you have going out there, understand that affects your credit. You know, student loans going into default, it affects your credit. We understand that. So taking on more debt than you can handle, especially in the realm of credit cards. I mean, you may think there's nothing wrong with, you know, having the multiple credit cards, and you know, well, I keep them paid at a 0 balance every month, and I'll be okay. But again, a lender is looking at, what will happen, as I said before, if you max out? And what will happen if you get into that bad habit of robbing Peter to pay Paul? You know, my student loan bill is due this month, but I've got that $2,000 credit card that I keep at a zero balance. And you know what? Trying to make ends meet here and things are a little short this month, I'll go ahead and use that. You know, I'll take a cash advance against that credit card to pay my student loan for the month. Bad move, especially if you're not reading the, everybody say it with me, fine print. You got to read the fine print. Because cash advances, of all things, predominantly always carry the higher balances. Always. And then, on top of that, good luck getting a fixed rate on a cash advance. A lot of times those cash advance rates are variable. And when we're talking about, as we read, on point number 3, this APR, read the fine print on this disclosure I gave you, will vary with the market based on the prime rate. It can go up with prime, it can sway, it can vary. How many are familiar with the new credit card laws that came out not too long ago? Anyone? Some of the credit card companies were kind of jacking up the rates, and they claimed, well, it was in our fine print, and we disclosed that we had the right to do so. Watch out for those kind of things. Does that make sense to everybody? Again, these are just basic principles here. Everybody here? All right. Number 5, and again, we're going to coincide a little bit with credit rules to live by. These go hand in hand. Do not rate shop. Do not rate shop. And then point number 2, with credit rules to live by, know the true cost of any credit you're considering. Interest can dramatically increase the cost of any item. So when you're rate shopping, what I mean by that is, as I said in the previous class, everything that glitters is not gold. You know, this introductory rate, it looks great. But the fixed rate, the variable rate that's attached to it is sky high. And I went for that, that glittery 0% balance transfer, not realizing that I was going to be charged 18% on new purchases, and understanding that every purchase I make, the interest on that purchase can dramatically affect my credit if I'm not paying that back on time. Which brings me to point number 6. Make more than the minimum payment, or pay it off. You got to understand, when you're making the minimum payment, you're being you're being charged interest-wise on whatever the balance is, and oftentimes, as we read in the fine print, which is point number 3, go all the way down to, on this sheet here, how we will calculate your balance and allocation of payment. We use a method called average daily balance, including new purchases. So that's kind of standard. I'm going to give you guys a formula for that. I'm not a mathematician, I'm a banker, but this is just a basic formula that I'm going to give you guys. It kind of shows you how credit card companies use what's called the average daily balance calculation to calculate the interest on your credit card. And then it says allocation of payment. Any payment you make in excess of the minimum payment due will be allocated to balances with higher APRs before balances with lower APRs. Allocation of your minimum payment due will be at our discretion. So understand, when you're making the minimum payment, you're saying, okay, well, at least it's showing, the credit bureaus that I'm making my payment on time. But there's, again, as we learned, the credit card company's job is to make money off of your money. So understand, when we're talking about using the average daily balance calculation, this is just a basic formula. And if you want to write it down, you can. It's just so that you can kind of know what your interest is each month on a balance. But step 1 is you add up the balance, your daily balance, for the number of days of the month. So 30, 31 days. So let's just say you only have $30 on your credit card. You divide that by the number of days. And we did a calculation earlier. Point number 2, the periodic interest rate, you divide that by 365 days and you get a figure. And then you use the figure from point number 1, which is adding your daily balance divided by the number of days in a month. All right? You multiply that by the interest rate, which is divided by 365 days in a year, and then you multiply that by the number of days in a month. Very basic math, but it gives you the interest monthly on what your balance is. In other words, this can turn out to be very hefty. It can turn out to be a very lucrative profit margin for your credit card companies. If you've got high balances, think about 1 or 2% interest monthly, on a Sears card. And we're talking about monthly here. When you're thinking about annual percentage rate, again, you're not being charged annually on that balance. You're being charged monthly. Does everybody understand that concept? So it can turn out to be a very lucrative profit of your money that you've worked so hard or working hard to eventually obtain for the credit card company. So understand, don't get into the minimum balance game. And see, it's a different concept than your credit card, your car loans or what have you. See, when you have a car loan and you're paying that minimum car payment, the concept is a little bit different, because even if you pay more on that car payment, you can always disclose to the car companies, I want this payment to be attached to principal and not interest. Well, car companies, they don't use the same calculation when they're calculating the interest of your monthly payment. This calculation here, what's called the average daily balance calculation, is a much more lucrative way to tack on that interest. So the name of the game, pay that balance off or pay more than what you need to pay. And don't just pay the minimum, because you're going to end up paying way more in interest than you should. And that just means more money for the credit card companies and less money for you. Number 7, which coincides as we're talking about making payments, and also coincides with rule number 3 on credit rules to live by. Do not ever, 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 ever make a late payment if you can help it. Making a late payment is really, really, truly a huge mistake. And see, this is when you got to begin to ask yourself, Do I have too many credit cards that I can handle? Do I have too much debt that I can handle, which we learned in point number 1 of credit rules to live by. You know, tardiness on your credit report always, no matter what the situation is, damages your FICO score. Does everyone know what the FICO score is in here? Show of hands. Hello. Do we need some coffee? No, I'm just kidding. Pay on time. Not only do you need to get out of the mentality of, if you have this mentality, oh, I'll just make the minimum because I've got other bills and I've got other, obligations. Try to make more than minimum, and whatever you do, pay it on time. Do not be late, because it really crushes your FICO score. And then point number 3 on credit rules to live by, it says paying off credit card balances every month is the key. If you can't pay the balance in full, try to pay more. Did we see this on point number 3? More than the minimum payment. So these are concepts, as we're learning today, that some of us may not have necessarily been fully aware of. How many, but show of hands, and you don't have to embarrass yourself, just kind of felt comfortable, just paying your minimum payment at times? I mean, we all do. At least it's paid. At least it won't damage my FICO score. But in the same regard, you're ending up paying more money than you really need to in the end, as it relates to the average daily balance calculation that credit card companies use. All right. Point number 8, and this is something I know no one in this room will ever do. Never ignore your monthly statement. Oh, it's just a statement. I've got a 0 balance on it. I'll just file it or whatever. I already know what my balance is. I haven't used that credit card in a couple months. Don't ignore your monthly statement, because there could be some type of new disclosure. There could be some type of new factor added into how your credit card company is handling their customers for whatever reason. There could be some type of new fine print going on in there. I mean, they have the right to change the fine print and move things around. You want to stay abreast of that. Does that make sense? Don't just ignore it because you figure, oh, well, I haven't used that card. It's at a 0 balance. But you still want to be aware of the changes that may be taking place. And you want to be aware, especially those of us that have credit cards that have variable interest rates, and we went after those credit cards with variable interest rates because we felt like we were getting the best rate out there. You especially want to pay attention to your monthly statement every month, especially if you have a variable rate. Or is there anyone here that has a variable rate on their credit card? By show of hands? Don't have to be embarrassed. We're getting the blood flowing. I mean, some of us go after the variable rate. I mean, hey, 8.99%, 7.99% looks really good to some of us. I've had a card with a variable rate in the past. We may not always be in a position where we can go after the fixed rate. But especially if you have the variable rate, pay attention to those monthly statements. Stay abreast of what's going on. It's your money. All right? Another rule that, again, this is something that I know no one in this room will do. Never exceed your credit limit. Bad, 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 bad. If you are, I'm going to tell you this really quickly, and again, the title of this workshop is the Perils of Credit, so I got to give you the perils. It's not always sunshine. I mean, you got to be aware of the pitfalls out there and the booby traps. Paying the minimum balance every month is a sure way to be on your way to exceeding your credit limit. That's just one way. I mean, going out and purchasing unnecessary items, which is point number 10, is key. So they go hand in hand. You can exceed your credit limit by buying things that you truly do not need. I can't repeat that more. I mean, oftentimes we fail to realize a credit card, it's really something that you should use for emergency purposes or use for something that you're going to get value out of. All right? Which is point number 5 on our rules to live by. And point number 4 was know the terms of your credit agreement, read and understand the fine print. That's something that we talked about earlier in point number 3, rule number 3. But point number 5 says don't finance an item for longer than its useful life. Don't put yourself in position of still having to make payments for something after you've disposed of it. Again, using your credit card to buy food. You eat it, it's gone. You get energy out of it. You know, food is not the smartest use of, buying food is not the smartest use of your credit card. And little retail purchases that, I mean, you know, if you're like me, when I was in college, I just always wanted the latest this and the latest that. I can't even fit that stuff anymore. You know, I've got shirts and shoes and all kinds of things that I can't even fit anymore. I mean, I look foolish trying to wear it, and it's the summertime, and you know, I look like I'm trying to show off muscles I don't have. You know, so never use or never use your credit card to buy things that you don't need. Never buy things that just are going to be useless a month or two from now. You know, if it's something that you're going to eventually dispose of in a pretty fast amount of time, don't use your credit card for it. I mean, there's nothing worse than looking at your credit card statement and you're seeing you're getting finance charged, you know, off of things that really you could have paid cash for, or if you didn't have the money for, you really didn't need in the first place. Does that make sense, everybody? And you know, when you have credit, you feel like you've got power, you know? You feel like you can kind of just show off a little bit. You know what? I'm going to treat myself to that new whatever it is that you want to buy. Be careful. Be careful. So, to recap, really quickly here. Point number 1, never have too many cards. Point number 2, understand introductory rates. Which brings us to point number 3, read the fine print. Point number 4, never choose a card for the wrong reasons. Point number 5, be careful rate shopping. Just because it glitters, it may not be gold. Don't just go after the great introductory rate just because it seems like it's a better offer than what you currently have, because it may not be. Number 6, make more than your minimum payments. Number 7, do not ever pay your bill late. If you can help it, please avoid that. Number 8, never ignore your monthly statement. Always read. I mean, if it has your name on it and it's a bill, read it. I mean, if it's an advertisement or, you know, just another gimmick, trash it. And that's another thing. Shred all those introductory rates and all those little flashy little envelopes that you get in the mail that have in big bold letters 0% introductory offer. All that stuff, trash it. If it's not going to make sense for you, and if you've got a great deal with what you got with your current credit card, don't fall into the gimmicks. Which also brings us to point number 9, never exceed your credit limit. Falling into gimmicks is the best way to exceed your credit limit. And point number 10, don't buy things that you don't need. And as we learned in our credit rules to live by, they coincide with our 10 points here. Don't take on more debt than necessary. Point number 2, know the cost of any credit you're considering. Interest can always dramatically increase the cost of any item. Pay off your credit card balances every month. If you can't pay them off in full, pay more than the minimum. Know the terms of your credit agreement. Read and understand the fine print. And 5, don't finance an item for longer than its useful life. If you're going to dispose of it, if it's a retail item or something that you really don't need, or something that you're not going to use or get much value out of, do not use your credit card to purchase it. So we've got about 10 or 15 minutes.
Just about 10.
Okay, just about 10. I went a little over. I like hearing myself talk sometimes. No, I'm just kidding. But these are just basic principles. You know, this isn't the class wasn't entitled, you know, how to be an expert on credit. It's just, you know, we're avoiding the perils, we're avoiding the pitfalls. Certain principles that we may not, they may seem rudimentary, they may seem basic and elementary, but you know, sometimes we don't follow our instinct and our common sense when it comes to credit with our finances. So it's just good for us to understand certain things to stay away from, and understanding how our credit can be affected by negligence or excessive spending. So with that being said, we've got about 10 minutes. Does anyone have any questions, anything that I can help you enlighten you as far as credit is concerned, or any questions I can answer? And your name is Deanna. How you doing?
Hi.
Yeah.
What is better to get, a bank credit card or like a store credit card? I'm just starting out, and I don't know which, like, I keep getting things in the mail from, like, certain banks, and they're like, you should get a student bank card with us, or should I just get a regular, like, go to, like, I don't know, a Sears or something and get a credit card from there?
I'm sorry, were you in?
Yeah, could you repeat the questions when they come up, just for the benefit?
Sure. So the question is from Deanna, what's better, a bank credit card or a store credit card? Well, I would prefer that you have a PNC credit card. Shameless plug. But you got to understand when you're dealing with store credit cards, and this is where it becomes very important to read and understand the fine print. Those department store credit cards often have the higher interest rates. That's just the reality of it. So your first time around, go for the bank credit card. Especially if you have a relationship with your bank, you have a banker that you can kind of interact with, a banker that can educate you on all of the perks and the products, perks of the products and all of the fine print of the products and all the services and et cetera that bank offers and all of the details of that credit card. You know, go for the bank credit card. My first credit card was a bank credit card, but I made the mistake of not reading the fine print, not consulting a banker, just signing up for a credit card, not knowing what I was getting myself into. So in your case, I would say really have a in-depth conversation with your banker. What's the best card for me? You know, a department card, oftentimes it's going to carry the higher interest rate, and just starting out, that may not be best for you, especially if you're, you know, still in school, you haven't really landed your first job, those kind of things. You know, department cards are, you know, I'm not against them, but you know, when you have the income to sustain those, and you know, you've already established your credit, then that may be something you want to do, because you may be able to you know, take advantage of the discounts or the percentage off of your favorite store, whatever the case may be. But just starting off, go with the bank card, if that makes sense. And your name?
Oh, I'm sorry, Olivia.
Olivia?
Olivia.
Olivia, okay. Yes, ma'am.
I was recently been looking into like taking out a car payment. I need a new car desperately, and I've been told that you don't want to take a car payment for more than 60 months or something like that. But then I was told by a car dealership that I should take a 72 month, when I don't really know who's right. I don't know. I've just been told that it's smart enough to take one out for longer than 60 months.
Well, it all depends. If you're paying any line of credit, any installment loan of any sort, any extensive type of loan, that you know beyond a shadow of a doubt you can pay on time every month, can only help your credit score. 60, 72, you know what, it may all depend on what you can handle. It may all depend on, this is your first car, what kind of finances you have to sustain that car payment. 72 might be a better option for you if you know you would rather knock off $50 or $100 off your car payment every month, because you're financing yourself through school, whatever the case is, because you have, you know, other obligations and you're just starting out. But the length of any line of credit, the length of any loan, shouldn't concern you more than, can I pay this loan on time every month, and am I comfortable with the payment? So if you have a 60-month loan and you've got a pretty hefty card note every month, I mean, what makes more sense, going for the 72 and knowing you can pay it on time every month, which is going to help your credit score, or going for the 60 because it's shorter, but then you fall behind a couple months, you know, which is not a good place to be in, because your credit card will be dramatically affected by any late payment. So whatever fits you, that's kind of a gray area. There's no plus or minus, but I would say the main concept there is pay on time every month. Pay more every month if you can, and tell, you know, the card dealer or the institution that issued you the loan, when I'm paying more, I want it to be knocked off my principal and not knocked off the interest, because that'll shorten even the span of the loan. You can pay it off earlier. Does that make sense?
Yep.
Okay. Yes, ma'am. And your name?
My name is Tara.
Tara.
Yes.
All right.
I have a question about fraudulent activity.
Okay.
I know that closing accounts is negative, like can show negatively in your credit report, but what if you close an account because of fraudulent activity? Does that reflect negatively?
Anytime you close, well, are you saying closing an account after you paid it off?
No, closing an account because there was excessive fraudulent activity
And it just being charged off and not paying it at all. Is that what you're saying?
No, they're taking the charges off, but I closed the account entirely because I didn't want the card anymore, since it's obviously been stolen. The number has been stolen by somebody.
Well, then you can negotiate with the credit card company or the bank, issue me a new one or issue me a different account number, whatever the case may be. But I wouldn't recommend just closing out your entire relationship with that company. If you will have use or need of credit in the future, keep the line of credit open because it can help you. But just negotiate with them. You know what? Give me a new account number, give me a new card, give me a new line. But I want to step away from this particular card altogether because my information was compromised. But still keep a line open if you can because it's going to help you in the long run. Does that make sense? Okay. Anybody else? Yes, ma'am. Melanie, I can see your name bright and shiny.
For those who have fallen into the pitfalls of credit cards, places to go for help or suggestions or, what do you do when you have fallen?
There are credit repair agencies out there all over the place. I would say speak with your bank as well for advice. If you came to my office, I'd sit down with you and I would maybe possibly refer you to some of the agencies that we work with. I don't know what area you're in, and quite frankly, I'm not familiar with this particular area of town. But I would say, speak with your bank, get some advice there, ask if they can refer you to a credit repair agency. A bank's job is not necessarily to help you repair your credit, so we're limited on the amount of advice that we can give you. I'm even limited to the amount of advice I can give you guys today as it relates to credit. I mean, this is just kind of a basic, fundamental discussion about credit. So, I would say talk to your bank for basic instruction, but you definitely want to speak to a credit specialist because they're the ones that are trained and legally can give you that advice without breaking any laws or giving you saying the wrong thing or that kind of thing.
Can I add?
Yeah, sure.
That there's also, if you have limited funds, there are places that are free to go.
Absolutely.
And go online and just be careful because there's also places that will want money up front, and I don't know, you just got to be really
That's
careful.
right. And of course, there's the free credit report websites out there. As you mentioned, is it Catherine? Be careful with some of those websites out there because some of them in the fine print, we learned about the fine print today, they'll sign you up for a recurring monthly payment of $19.99 or whatever the case may be just by inquiring about your credit report. You got to watch out for the gimmicks, but there are resources out there, like as Catherine said, for free.
If I could just let everybody know that if you do need some of those resources, CSB does have some information in the office, so you can contact us and we can make that available to you, free services.
I also wanted to mention, if anyone wants my card, I can give you that today if you're interested in learning more about PNC. If you have a relationship with PNC or want to learn more about what we can offer you or just want to contact me for any reason, I can give you my card at the end. You guys can, on your way out, I'll give you that. You had a question?
Yes. Can you just wait for a credit card to close if it's been inactive? Or will it close?
Well, you got to look. You got to understand what your agreement is. The credit card may not automatically close, and it's not a good idea to not understand the terms and agreement of that credit card. It's the same principle of just not reading your monthly statement. You want to know, what the terms of the agreement are. I mean, every bank is different, so you really want to know, how long can I go without using this card before it becomes inactive or dormant or whatever the case is. But don't just say, well, I'm not using it. Just let it fall by the wayside. Be mindful of what the agreement entails. Read the fine print. And your name?
Tanea.
Tanea, yes ma'am.
I was wondering, I'm going in as a sophomore, and I was wondering about establishing credit. Is getting a credit card a good way of establishing credit? Because depending on who you talk to, it's not such a good way, and other times it is.
Well, I mean, again, it all depends on what you're looking to establish. You're looking to establish credit. I mean, I would say consult your parents, consult your banker. What makes most sense for you? What are you looking to get out of it? If you are in need of a car eventually, maybe establishing credit via having a co-signer for your first car might be a better idea. One of the reasons why folks say that it may not be the best idea is because you don't want to put yourself in college in a situation where you're tempted to go berserk with the credit card. Been there and done that, trust me. So you know, I don't know what your situation is, but you know, a car loan, a small car loan, may be better for you just starting out. It's really dependent on what your needs are and where you find yourself in life, and how, you know, how disciplined you can be with a credit card. That's something you need to look into. Yes, sir. Your name?
Keith.
Keith. Okay.
So then, if credit cards, hypothetically speaking, aren't a good way to improve your credit, what would be another way to like establish your credit?
Well, I didn't say the credit cards are a bad way.
I know,
But I mean, but if you're not going to be disciplined, it could work against you. So I mean, you know, car loans and you know, even asking a parent to co-sign on the loan, maybe even a secured credit card. That's an option. If you had maybe a little bit of money saved and you just want to, you know, just get yourself started. One of the things that we offer at PNC is a secured credit card for folks that don't have credit or have bad credit and are looking to reestablish or build their credit. You can't go wrong with a secured credit card. Some banks offer secured credit cards for as minimum as $200 or $250 down. And at least you have something that you're paying back one time, paying down every month, you're establishing yourself. And a secured credit card is like putting a security deposit down on an apartment. You know, they don't keep your $250 forever, but it's a secured agreement. So that may be something a little bit more intelligent just to get yourself started and you've established credit. That makes sense. Yes, sir. Curtis. I was
going to ask what a secured credit card was.
Secured credit card is simply, you're securing the line. So you don't have to necessarily, the credit card company is not necessarily going to look at your credit score to deem if you're worthy enough to hold a credit card. You're saying, here's money up front. Some banks have agreements where you can put $250 down or $500 down or whatever the case is, and that becomes your credit limit. And you've secured it with cash up front, but it works just like a credit card in that when you make a purchase and you pay that monthly bill on time, it's reported positively to the credit bureaus, which boosts your credit. So it's a sure way of boosting your credit without having to worry about your credit score being affected negatively, or if you have a bad credit score, you may say, you know, well, my bank will never give me a credit card. Well, you know, this is a secure way to do it. I mean, because you're giving them cash right up front.
Are there a lot of branches of PNC in the New York City?
We have three, and we're building more. We have one is near Madison Square Garden. One is in the Manhattan area, and I'm not sure where. You can find it right online if you go to our website. And we just built another one, I think, which is closer to, what is that area? And don't quote me. You got to look online, but we have three thus far, and we're building more. And we have a slew of branches in northern New Jersey, and in the surrounding, you know, New York area. But there are three so far. If you look online, they'll give you the exact addresses. I've yet to visit any of those branches, but I know that we just built three. No problem. How are we doing on time, Ms. Harrison?
We're just about finished.
Just about finished. We have
10:51.
Okay, we've got time for your name?
Hong Lo.
Hong Loan. Okay, how you doing?
Does renting an apartment affect your credit score?
And I'm not the apartment consultant or leasing consultant expert, but I do know that a lot of apartment complexes will check your credit score when you're looking to rent. I'm not particularly sure all the particulars of. I know that paying your rent on time doesn't help your credit score. I can tell you that. And I do know that they will check your credit history before they offer you a lease. I can tell you that much. All the ins and outs, you might want to consult a apartment leasing consultant or what have you, because I don't want to give you the wrong information. Okay, anyone else? Well, I enjoyed you all. Thank you so much. It was a great session. Hopefully you learned something today.